Good afternoon. Welcome to Cool Talk. Welcome back, and hope you have enjoyed the several episodes we have posted so far. Let us know what you want to hear, and if you like what you're hearing, you can go to cooltalkpodcast.com. Send us some information. We're getting now to the nitty gritty, the favorite part of the year, tax season. So I am here today. My guest today is Robert Harding from Brockman Drinkard in Pennington, who does taxes, and just a few minutes of talking, just see what, pick Robert's brain a little bit and tell us what, some tax, maybe some pointers people may not know of what to do when they're maybe preparing to bring a person to, or taxes to Robert, what you need to bring and stuff. But thank you for coming, Robert. I appreciate it.
Oh.
And then tell us a little bit about yourself, where you work, and what your job is.
Okay, like Brandon said, I'm with Brockman Drinkard Pennington. I've been there 12 years, and I'm a native of the Lynchburg area. I grew up and went to in the Concord, Stonewall area of the greater Lynchburg area. I graduated from mathematics and went on to Lynchburg College to get my degree in accounting. So I've never ventured very far, and honestly had no
No
desire,
need to, huh?
no need to, no desire to be anywhere else. To be honest, So
Well, good. How long have you been doing accounting work?
Well, I
From college on?
yeah, from college on. I mean,
Okay.
I worked the first 5 years of my career at a bank. It was United Virginia Bank, which became Crestar Bank, which became SunTrust, and will now change to Truist, I believe.
Truist.
Yeah. So worked there 5 years, and I was with First Colony GE for 14 years, and then commuted to Roanoke for 5.5 years to Shenandoah Life in Roanoke, and I had opportunity to come back here and reduce my commute from 55 miles to 5 miles every day. So that's been good.
Yeah, awesome. So you're doing it's getting tax season. Let's say I'm maybe a first time, maybe not a first time, maybe it's first time somebody's getting ready to use a CPA for taxes and stuff. I mean, is it just a W-2 that they need to bring you? Do you advise them maybe to bring different things or have
Well,
prepared?
if you're new to me preparing your taxes, or if you have filed before, I'd like for you to bring your prior year tax return. There's a lot of information that we can garner off that tax return. Social Security numbers, dependents, and on the state return that has your birth dates, all of which we'll need in setting you up in our software and getting the ball rolling on that. In terms of documents to bring, depending on what you have, some are simple as W-2s or 1090. And then you have independent contractors who might have 1099s and things of that nature. And particularly the 1099s, there could be a Schedule C if it's if we're talking individuals,
Right.
Schedule C filer, and which you're able to write off of a lot of out-of-pocket expenses. Just about anything that you spend out of pocket for that particular business is a potential write-off kind of thing. And what we like to get, or at least what I like to get, is a summary of the different line items or types of expenses. There are times when somebody might bring in a box of receipts.
Oh, yeah.
That makes it tough.
Yeah.
That makes it tough, particularly in the heat of the moment.
That's a lot to count up and
It
look
is a
at.
lot to count
itemize.
up and that kind of thing. So, I don't really need to see any receipts. So if you can just summarize by similar categories is kind of what we like to see.
Yeah, and if personally, if you, I guess, is there a deciding mark to where you can itemize or where you claim like personally, if it's not a business, what's the mark to where you can claim more? You have to have like a long sheet or a short sheet, or they
Well,
just give you one amount, or
Well, yeah, we just there don't need to be a lot of different categories, just similar categories, and we always have, particularly your Schedule Cs, you have other expenses that you might not have a Schedule C or a Schedule F if you're a farmer. I mean, if you download those, you can kind of see the various categories.
Gotcha.
And if it doesn't fit into one of those categories, like we said, there's other expenses that you can put those in. Um,
And then you got, I guess you can, anything you have on your house, houses and different things, they'll send you forms to
Yeah,
write
yeah,
off
you'll
on.
get your 1098s from for houses now, and that's primarily for your itemized deductions.
Okay.
Now, your itemized deductions can include medical expenses, taxes, real estate taxes, personal property taxes, state taxes paid. Those kind of things go in as taxes on your itemized deductions. Charitable contributions
Okay.
and things like that. Now, uh, the tax jobbing at Tax and Cut and Jobs Act of 2018
Hmm.
increased the standard deduction quite a bit.
Okay.
Historically, they had always indicated that about 75% of persons would take the standard deduction,
Okay.
and now it's more like 95% because they pretty
They
much
upped it enough to where not many people
people.
get over that.
That's correct. That's correct. For married filing jointly is about 24,500. So you got to have that much in those type of expenses in order to itemize.
Right. Okay. Yeah, it does get right much in this.
Yeah.
Yeah. So, um, and then are there? I guess are most of the laws for this year staying the same as been
They're
anything?
not, I would kind of want to touch on that a little bit. I mean, there's not a lot of, changes. I mean, the big changes occurred again with the Tax Cut and Jobs Act that I mentioned. But there are a couple of nuances this year, uh, some of which most of us have received the benefit of, and that has to do with the stimulus checks that we've
Okay.
gotten, the ones that we got back in April or March, and the
And the
ones that
one
we
in
got in
December.
December. Basically, what they were advances to credits that you're going to see on your 2020 tax return.
Okay.
So even if you didn't get those checks, stimulus checks, you will have the opportunity to get them in 2020 when you file your tax return. Again, they were advance payments, so there will be on your tax return, and those advance payments were based on 2019 and 2018
Huh. Okay.
tax
So
returns.
don't be alarmed if you file this year and show a credit that equaled that amount, but you don't get it
That's
because
correct. Yeah,
they'll.
because there will be a reconciliation. So
Okay.
basically,
That's it.
you're,
A lot of people don't know that.
yeah. I mean, you'll have and you can qualify if you didn't qualify in 2018 or 2019 or didn't get one because you hadn't filed a return. You can file a return in 2020, and
And
so
they'll add it to it if you
right.
miss.
So it will the preparer will calculate what you qualified
I
for.
was wondering where they would get all that money back from. So you got to get it
Yeah.
from somewhere. You just can't give it. So they're just loaning you the money up front for the
That's
following year's taxes.
absolutely exactly what they're doing.
So if what about the up? I know the anything with business. I know they did another round of PPP, but there was a lot more stipulations to the new PPP
Yeah, well,
than the first round.
right. That was one of the things that came out last month. It was, that is a document that are rules that we're still trying to wrap our arms around. It was a 5,000 page
Yeah.
a
And I actually
document.
saw people online say they got on to apply yesterday, and they actually moved it to February before EIDL and PPP is going to be active again. It was supposed to be last week, but they actually cut it off and said February something.
Well, yeah, and that doesn't surprise
Yeah,
me.
because it wasn't ready.
Yeah, that doesn't surprise me. That's kind of, the way it was the first round go around,
Right.
or whatever. But yeah, I mean, the second round of PPP loans the calculation is very similar to the first round based on payroll. And average for the month or average for the year, I guess, times 2.5. Times 2.5. It was basically now the one stipulation with the second round that was different from the first round is that you need to show in either the first, second, or third quarter of 20 and fourth quarter of 2020 a decrease in revenues, gross revenues of at
Okay.
least 25%.
So yeah, and that's got to be, well, I guess if you did it, you can say it's due to COVID, not something else, but you somehow got to show it was due to maybe COVID and quarantine.
Yeah,
and
you would
stuff.
probably have to testify to that. But there were a number, obviously a 5,000-page document.
that's
There
a
were a lot
lot.
of stuff
Yeah.
that came out of it.
That would take forever to read.
Yeah,
I think I'll probably just pass on
yeah,
applying on
get the
this
Crip
one.
notes or something like that. But and one of the things about that came out as part of that was there was a lot of uncertainty with the first round, whether those expenses that you use the PPP money for, payroll, utilities, rent, mortgage, that kind of thing, whether that was going to be deductible. Congress did the right thing last month and said that yes, those expenses
Are still the same this time?
yeah, I mean, you can deduct your payroll expenses even if you got the PPP loan.
Okay.
So in essence, that made it a non-taxable event kind of thing. I mean, a couple of the other things that came out of that was, or even this goes back as well. I mean, a lot of stuff that had happened for businesses in 2020,
Right.
and it was weird because some companies were frailing and and had to shut down for a while. I mean, I
sad.
think of your restaurant industries and and others were able to just to hold steady and not see a big drop off. And then there were others that actually flourished during that time.
Yeah, it was tough.
But you had mentioned, sick leave. That was, if you were impacted, whether you even have to take care of somebody who, was diagnosed or you had to self-quarantine or whatever, employers were required to pay for sick leave.
Right.
They were
Up to like
maximum
80 hours, I think, up max.
Yeah,
We had to use it a few times where I just went on QuickBooks and clicked on that employee COVID CARES Act if they were quarantining because of a family member or sick.
That's right.
And it would pay the base rate, but it wouldn't charge me the tax part on it or something. I think is the way it looked different.
Yeah, I mean,
Like,
you
if
actually
you made $10 an hour.
Yeah.
It didn't charge me the withholding.
Right, so you would pay that individual, those wages that, even though he's not there at work, but when you filed your quarterly payroll taxes, you actually got that back as a refund. So any wages plus the employer taxes on that gets.
So they'll deduct from what I owe, maybe.
Yes,
most likely.
yes, exactly. And those were set to expire at 12/31, but this thing last month, the Consolidated Appropriations Act is what it's called. I mean, that extended that through to March 31st.
Okay, that's good to know. That's good to know. So if anybody's affected, they could still do that until then, until it dies out on the 31st. Okay.
And hitting, I guess, one point on the PPP loan. I mean, the rules, particularly with the first round, and because a lot of people are now in the forgiveness part of that, and the SBA supposedly came out with a simplified form, 3508S for simple, I suppose, is what the S means.
I hope so.
Yeah, really. For loans under $150,000. I mean, originally that particular application was for $50,000 and less, and basically all that application does is you have to attest that you use the money the way it was supposed to be used. You don't necessarily need to provide a lot of documentation. You need to keep the documentation,
right?
But you don't need to provide.
It'd be a lot easier a lot less headache getting it approved and wiped out than it was before.
That's right. And one of the other things that was can be big for employers, part of the legislation last month was the employee retention tax credit. If your business was affected and you had to shut down, or you showed a big decrease in revenues, it was 50%. If you showed a decrease of 50% in revenues, you could qualify for the
retention
retention
thing,
credit.
yeah,
That's
up to
correct.
1,000 per employee, I think it was, wasn't it?
Yeah, well, I think it was 5,000 per employee. I mean, a maximum of $10,000. It was a 50% credit.
Okay.
And so it's basically up to $5,000 employee. Now, that's even better after last month, because now they are saying that you could get a credit up to 70% of those wages. So if you paid them $10,000, you could get $7,000 per employee, and you only have to show a decrease in gross revenue of 20% versus the 50%. So,
well, that was some good things that did come out, help keep businesses. Hopefully, not we don't lose a ton of businesses still with this, and the pandemic will be over soon, where we can try to get the businesses built back up without having to need assistance.
And one thing, Brandon, if you don't mind, that
yeah.
I failed to mention on the PPP loans is that if you missed out on the first round, you still have time to get the first round and the second round of the PPP loans.
Okay.
Because the deadline originally was August 20th of 2020. That was a deadline to apply. But again, with this, they came out last.
They extended it.
Yes, you have until March 31st of this year to apply for the first and potentially the second one too. You have to use up the funds before you can apply for the second one.
So I got you. Okay, do one at a time.
That's correct.
And then I guess people may not know. I saw something the other day that they didn't move tax filing date, or they moved start of tax season or something, the date with it. So, or can you start filing personal taxes anytime?
Well, I mean, the IRS isn't set up. For the various softwares they had to accept. Alan, we had thought that it would be any day now, but I did hear somebody say that it may be the first. Part of February.
I thought I seen February 10th or 15th.
It could be.
Maybe was to be the start of tax season. I guess that's IRS have to change over from doing PPP and the SBA stuff to being able to accept your reports.
Right.
So if you're doing taxes this year, you may want to wait until or see what date that is, and then make an appointment and do it then. To gives you a couple more weeks to get things together too.
That's right.
If you need to get something together.
Right. Now, in terms of, as far as we know right now, the deadline is still April 15th.
Okay.
Now that's not to say
last year was moved because COVID hit.
Right.
But I think it
to
now
July 15th.
But they're not moving this one as of yet.
I have not heard anything to that extent yet.
Okay.
I wouldn't be surprised.
Wouldn't be surprised as we get closer. Yeah.
Right.
If they move the start date, they may move it to June or something. But I haven't heard of anything as of yet that says different. So
I have not.
Great info, man. Anything else you wrote down that I don't know about, that maybe tax wise or?
Yeah, I told Brandon I just had to make some notes.
I don't blame you.
I'm not good at speaking off the cuff or whatever.
Yeah, anything you got notes on that would help our listeners, man, please feel free to share, because that's good info. You've given us a lot of good info.
Well, I've mentioned a couple of things that I had jotted down that it might be topics of interest or whatever.
Fine, yeah.
I mentioned already the advance payments of the stimulus money and stuff like that. And if you didn't get it, you'll be credits. Another thing that's, if you look at the form, the 1040 form for individuals, it's not a lot different. The only other line that I can think of that's different has to do with charitable contributions. Everybody, before you had to be, you had to itemize in order to get a charitable contribution. Now everybody will be able to take up. It's not big money, but you can get a deduction of $300 even if you don't itemize for charitable contributions. Another thing about charitable deductions that I wanted to mention is if you do itemize, historically, that's been you could only deduct up to 50% of your adjusted gross income.
Okay.
And then with the Tax Cut and Jobs Act, that increased to 60%. So whatever your AGI was, now for 2020, you can deduct up to 100% of your adjusted gross income
Huh.
if you're in a position that you can
Wow.
afford to do that. I think, obviously, I think a lot of the nonprofits were hurt because of this
Yeah, it had to. 'Cause
pandemic.
donations were down.
Right. So this
mean,
was a way that the IRS
That
was
hurt. That
trying
was one of the first thing that went when people were shut down, and I know it hurt when our business slowed up a lot when it first hit. So our first thing we had to cut back on was donations and some
Right.
advertising, but we did get back in it as soon as business picked up. But that's just usually the first thing people cut: advertising and some
Right.
donations. But
And one of the other things that is a little different this year, and again, not huge, but if you're an educator or teacher, you've historically always gotten a $250 deduction for school supplies for your room if you're a teacher, kind of thing.
right,
And the deduction is $250, but you can include in there any type of PPP equipment that you had to buy for your
Okay.
classroom,
Okay.
or sanitation wipes, and all that will be included. You can include in that potential $250.
well, that's good because I'm sure they spent a lot of
Oh
money.
yeah,
on
and
that.
they spend
A lot
a
of-
lot of them spend a lot more than $250.
Right.
And one of the other things for our older tax filers would be if they have retirement accounts or IRAs. And once you reach a certain age, 72 and a half, you have to take what they call a required minimum distribution.
Okay.
And believe it or not, a lot of the old people don't like to take the RMDs, required minimum distributions, because it means more tax. It could put them in a different tax bracket and that kind of thing. And so for 2020, that's been waived, so they don't have to take
Wow. Okay.
a distribution.
Okay.
Not sure how many people are going to take advantage of that, but based on my experience, I wouldn't be surprised if a lot of them. I've already gotten questions
Right.
about
If you've
that.
done it, you might as well on that if it's
Right.
waived, because
That's right.
that'd save a lot for at least a year.
One of the last things I guess I just wanted to hit on for the some changes for 2020 had to do with distributions from an IRA. Historically, you would have to, if you were under 59 and a half, you got a 10% penalty if you had to take a distribution, because the IRS is trying to encourage you to keep that money in there.
Right.
But if you have been, if you're a qualifying person, and there are several items for one to be a qualifying person. One is you lost your job, your hours were cut back significantly because of the pandemic and that kind of thing. You can take up to $100,000 out of your IRA without being, if you're under 59 and a half, without being hit by
The extra taxes.
The extra taxes,
A
or whatever.
one-time thing.
Right. And you also have 3 years. I mean, you could always borrow from it, but you would have to put the money back within 60 days.
Okay.
With this new legislation, you can pay it back in 3 years.
Nice. Okay.
But there's a little caveat to that, in that you have to take 1/3 of it into income each year. So if you don't pay it back to year 3, you have taken 1/3 of that to income in year 1, and then 1/3 in year 2. But if you pay it back in year 3, you can go back and amend those returns and get that any tax back that was on that.
Okay.
So
Well, that's good information. Real good information.
So
Thanks, man. That's good information if you're first time or a business or you've dealt with PPP. A lot of good information here. So tax seasons is here. I know it's starting February, but you still have.
believe me, it's here.
It's here. It's here. January 1st.
That's
hits.
it.
As soon as you get to work after Christmas, tax accountings are busy till July, August, and
Yeah.
they get about a month off and round up for the end of the year. But thanks for coming in and sharing that, Robert. That'll help a lot of people that may have had some questions that hadn't got answered yet. So thank you for doing that, and hope everybody got some good information, and we look forward to seeing you on the next episode.